All right, guys, here we are. We're live. I'm just setting out the notices that we're going live for the Disney call. So that's just what I'm doing now. I'm putting it on Discord and Twitter. Man, I messed that up. Okay, let me see if I can get it going here. Yes, we want to listen to it. I'm going to show y'all what I'm doing here with it. How we're getting set up. Okay, why is there no volume? Oh, play.
With the Disney Magic, which is currently sailing short-term staycations for UK residents, and a Disney Dream set sail on its first US-based cruise this
Hey
week.
guys, could y'all throw up in chat
Future
if you can
bookings
hear
for
that
all of our
okay?
ships remain strong, with bookings in the third quarter in particular having benefited from the announcement of our fall 2022 itineraries and the successful marketing launch of our fifth ship, the Disney Wish, which will set sail in summer of 2022. As our parks business continues its recovery and we see demand
That's what
grow,
we're wondering about
we
right
are
here, the
now
parks
putting into
recovery.
action some of the amazing guest-centric services that we have been developing over the last few years. These include Magic Key, our recently announced new annual pass membership program at Disneyland. It provides great value and a variety of options for our guests and will be available starting on August 25th. The reaction to the news from fans has been extremely positive. Additionally, we've made significant investments in sophisticated technology and tools, creating a revolutionary new multi-tiered service
Here, I can do a
we're
pop-out
calling
chat here.
Disney Genie that will enable our guests to more easily and efficiently navigate everything our parks have to offer. We're very, very excited about this new service, and we'll be providing additional details soon. The goal of Disney Genie, which will appear in a user-friendly app, is to create a better, more personalized and customized experience for guests, putting them in control and providing even greater flexibility and choice. They'll be able to spend less time waiting in line and figuring out what attractions or dining options are available, and more time having fun. On the direct-to-consumer side, we are extremely pleased with the continuing success of our portfolio of streaming services. Disney Plus, ESPN Plus, and Hulu have performed incredibly well, with 116 million, 14.9 million, and 42.8 million subscribers respectively, for a
Okay, while
total
he's
of
going over
nearly
that, guys, I want to look up.
174
They've already
million
posted
subscriptions.
um,
Numerous
the
breakout hits from our beloved
earnings,
brands
and we
include
know what
The
the
Cars
expected
Hotel
was.
and
So we're
Marvel's
going to look
Rescue
that up. I'm going to
and
let him
Something in
talk
Minnesota
while I show it on the
have
screen.
contributed to strong engagement and new subscriber growth in core Disney Plus markets. And we have continued to launch Disney Plus in new markets around the world, including Disney Plus Hotstar in Malaysia and Thailand in Q3. Disney Plus is also currently available in a limited capacity in Japan and will expand to the full market in late October, followed by additional APAC markets including South Korea, Taiwan, and Hong Kong in mid-November. The launch of Disney Plus in Eastern Europe has moved from late 2021 to summer of 2022, primarily to allow for an expanded footprint that will include parts of the Middle East and South Africa. Additionally, we're excited about the launch of Star Plus throughout Latin America later this month. As we've said, our direct-to-consumer business is the company's top priority, and among our unique advantages in promoting
And
and
I'll have
growing
the
our D2C
pop-up
service
chat.
are our powerhouse brands and the vast array of
Two.
direct consumer touchpoints we have across our businesses. From our
So if you got any
network
questions, ask in
to our
chat,
theme
and I've got
parks
it
to our
here where I
consumer
can easily
products.
see it.
This synergy enables us to raise consumer awareness and further increase engagement with our streaming services. And the power of this synergy will be on full display on November 12th, when we celebrate Disney Plus Day with an unprecedented, company-wide, cross-promotional campaign.
Okay,
Our
guys.
robust pipeline of content.
It looks like... Okay, so we did beat on revenue and EPS. The EPS we beat by 42%, and revenue we beat just by 1.32%. But you got to understand that hitting these estimates is key for this price to pop. The fact that we beat it at all means that it's very bullish, because the naysayers were saying that we wasn't going to not only not beat it, but we was not going to beat it by hundreds of percents. The people who were bullish on it was saying, no, we're easily going to beat this. And we did. We easily beat it. They estimated revenue at 16 billion, and we got over 17 billion. The estimated EPS was 0.56, and we got 0.80. Those are really good numbers, guys. So instead of just looking at what they made, look and see what the estimates were, and if it beat it and by how much. That's what you want to look at. So let me let him talk again.
Performing film at the domestic box office since the start of the pandemic. Both Bob Iger and I, along with the leaders of our creative and distribution teams, determined this was the right strategy because it would enable us to reach the broadest possible audience. And just to reiterate, distribution decisions are made on a film-by-film basis based on global marketplace conditions and consumer behavior. We will continue to utilize all available options going forward, learn from insights gained with each release, and innovate accordingly, while always doing what we believe is in the best interest of the film.
Guys, if you look right up here in this takeaway, as a matter of fact, let me pull it up here. You can read it better. It says the key takeaways for it, and we'll talk about it here in a minute.
Followed by Marvel's newest action adventure,
Right there, the movies.
And the Legend of the Ten Rings on September 3rd. The highly anticipated.
So they're telling you there's more to be bullish about than what's already showed. We have more coming to you.
Set for December, as is The Kingsman, a prequel in the popular Kingsman series. We have Disney Animation Studios Encanto, an incredibly heartwarming story set in a magical town in Colombia and featuring music by the incomparable Lin-Manuel Miranda.
All right, I didn't know he had a part in it.
Includes 4 feature films in fiscal 2022.
Oh wait, they're talking about, yeah, never mind. I know what they're talking about.
To Doctor Strange, Thor, and Black Panther. A brand new Indiana Jones adventure starring Harrison Ford is due in the summer, as is the origin story of another intrepid explorer named Lightyear, a spin-off of the beloved Toy Story franchise.
So 4 new Marvels, Indiana Jones, and another Toy Story. Guys, those are billion-dollar makers.
Unparalleled entertainment, whether they're visiting one of our parks or watching one of our films in a theater or on our streaming platforms. And as we
pretty much the takeaway from that is there's room for growth.
Right steps,
you know, yeah, we made this, but we're going to beat the hell out of that next quarter, or next year, or next 10 years.
I am as optimistic as ever about the future of our company. We have a robust and growing portfolio of DTC services powered by the world's best storytellers and greatest brands and franchises. And a parks business which extends those stories and creates a place where magic comes to life in a more guest-friendly way than ever. And with that, I'll turn it over to Christine, and she'll talk in greater detail about the quarter and the way ahead.
Thanks, Bob, and good afternoon, everyone.
Okay, Bob.
Excluding certain items, diluted earnings per share for the third fiscal quarter was 80 cents, an increase of 72 cents from the prior year quarter. I'll walk through our results today by segment, starting with Parks, Experiences, and Products, where we continued to benefit from improvements and recovery at our parks and resorts as well as at Consumer Products. Segment operating income at DPEP in Q3 increased by $2.2 billion year over year. At Parks and Experiences, we continued to benefit in the third quarter from the reopening of our sites.
Let me pull
around
this
the
up
world.
on here, guys, better.
Walt Disney World Resort and Shanghai Disney Resort were both open for the entire third quarter, whereas in the prior year quarter, Walt Disney World was closed for the entire quarter and Shanghai Disney was open for 48 days. Hong Kong Disneyland and Disneyland Paris were open for 72 days and 19 days respectively in the third quarter versus 10 days and 0 days in the prior year quarter. And Disneyland Resort
So the same thing we was
opened
reading on Bazinga,
65
but
days
in the
during
page
third
itself.
quarter and was closed for all of the prior year quarter. At Walt Disney World, third quarter attendance levels were generally at or near our daily capacity levels, which increased throughout the quarter. Disneyland Resort also steadily increased attendance and capacity following its reopening at the end of April.
Disney price
And
and after hours is currently
after
at
the lifting of
$188.45.
restrictions on June 15th. Guest spending at our domestic parks has been exceptionally strong, with third quarter per caps up significantly versus fiscal 2019 at both Walt Disney World and Disneyland. Guest spend has benefited from pent-up demand and favorable guest mix, driving higher admissions per caps, as well as from spending on products related to Star Wars, Galaxy's Edge, and Avengers Campus. Looking forward, theme park reservations at both of our domestic parks remain strong, and we continue to utilize our yield management strategy to deliver the optimal guest experience and provide flexibility to our guests during these dynamic times, all while driving economic return.
Sorry about that, guys.
At Consumer Products, improved results year over year were driven by growth at both our merchandise licensing and retail businesses. Growth in merchandise licensing was primarily due to higher revenue from merchandise based on several of our key franchises, including Mickey and Minnie, Star Wars, including The Mandalorian.
That's a
Disney
damn good
Princess,
show, by the
and
way.
Spider-Man. The increase in retail was due to higher results at Disney stores, most of which were closed in the prior year quarter, as well as a comparison to the impairment of store assets in the prior year quarter. Moving on to our Media and Entertainment Distribution segment. Third quarter operating income decreased by about $1 billion versus the prior year, as improved results at direct-to-consumer were offset by declines at linear networks and content sales, licensing, and other. At linear networks, operating results were lower at both our domestic and international channels. At domestic channels, both cable and broadcasting operating income decreased in the third quarter versus the prior year. The decrease in operating income at cable was due to higher programming and production costs and higher marketing costs, partially offset by higher advertising and affiliate revenue. As we called out last quarter, the increase in Q3 programming and production costs was due to the return of live sports at ESPN, driven by the NBA and Major League Baseball. In the prior year quarter, a significant number of live sporting events were canceled or delayed due to COVID-19. At broadcasting, lower results from the ABC television network were only partially offset by growth at our owned television stations. The decrease at ABC was largely due to higher programming and production costs, partially offset by higher advertising and affiliate revenue. The increase in programming and production costs was due to an increase in the average cost of programming and the shift in timing of the Academy Awards, which aired in the third quarter compared to the second quarter in the prior fiscal year. Domestic advertising revenue increased year over year at both cable and broadcasting, driven by favorable comparisons versus the prior year due to COVID-19. At cable, the increase was driven by ESPN, where third quarter advertising revenue increased by $400 million versus the prior year, reflecting the return of live sporting events. Q4 to date, domestic cash advertising revenue at ESPN is currently pacing above prior year. But bear in mind that this comparison is complicated by various COVID and timing impacts from the prior year. We're not going to provide a forecast for the quarter, but the underlying sports ad marketplace remains strong for us, particularly in a quarter in which the Olympics were held. At broadcasting, higher advertising results were primarily driven by increased rates and the timing of the Academy Awards, which benefited both the owned television stations and ABC. Total domestic affiliate revenue increased 4% in the quarter. This was
You
driven
see
by the
this?
benefit of
Walt
8
Disney
points of
stock
growth
falls
from
on
higher
revenue
rates,
miss.
offset by a 3-point decline due to a decrease
No,
in
it's not.
subscribers. Results at international channels
It's actually
declined
almost
due to
hitting
higher
190
programming
right
and production
now.
costs, partially offset by higher advertising revenue.
That's got to be
Both
an
of
older
these factors
thing.
were impacted by the return of live sporting events, and in particular,
Right.
the Indian Premier League,
People
which
getting back
held
out of the
cricket
house.
matches from April 9th until the season was postponed on May 4th.
It's
versus
especially
no
big
matches in
overseas.
the prior year quarter due to COVID-19. Turning to direct-to-consumer, Q3
Fire.
operating income improved by over $300 million versus the prior year,
Wow.
driven by Hulu, partially offset by a higher loss at Disney+.
Yeah, Disney owns Hulu now, don't
The
they?
increase at Hulu was due to growth in subscription and advertising revenue, partially offset by higher programming costs related to Hulu Live. Hulu ended the third quarter
Right,
with
but that'll
42.8
change
million
when
paid
you start
subscribers,
getting more
up
into it. It's just
from
because you just started
41.6
it out.
million in Q2,
Well, a new
inclusive
bigger version
of the
of it.
Hulu Live digital MVPD service. Paid subscribers to Hulu Live decreased slightly to 3.7 million from 3.8 million at the end of Q2.
See, that shocks me because everybody I
At
know
Disney
around
Plus,
here is
operating
getting Hulu.
results decreased versus the prior year due to higher programming and production,
I bet you that
marketing,
changes
and
in the next
technology
quarter.
costs, driven by the ongoing expansion of the service. These higher costs were partially offset by increased subscription revenue, reflecting subscriber growth and increases in retail pricing, as well as Premier Access revenue for Cruella. Note that Disney Plus Premier Access revenue is included in our DTC operating results, but is excluded for the purposes of calculating ARPU. As Bob mentioned earlier, we ended the third quarter with 116 million global paid subscribers to Disney Plus, up from approximately 104 million in the second quarter. Disney Plus Hotstar accounted for the majority of our net subscriber additions between Q2 and Q3, making up a little less than 40% of our total Disney Plus subscriber base as of the end of the third quarter. However, subscriber growth was also solid at our core Disney Plus markets, excluding Disney Plus Hotstar, with total quarter-over-quarter net adds in those markets consistent with net adds from Q2. Disney Plus's overall ARPU this quarter was $4.16. Excluding Disney Plus Hotstar, it was $6.12, or an increase of about 50 cents versus the second quarter, reflecting a benefit from the recent price increases both domestically and abroad. Disney Plus Hotstar ARPU also increased from Q2 to Q3 due to higher ad revenue per subscriber, reflecting the roughly 4 weeks of IPL matches that were played in Q3 versus none in Q2. At ESPN Plus, operating results in the quarter were comparable versus the prior year. ESPN Plus ended Q3 with 14.9 million paid subscribers, reflecting over 1 million net subscriber additions versus the second quarter. Content sales, licensing, and other
I'm so glad we
operating
got them
revenue
calls, man.
decreased in the third quarter
We
versus
are at
the prior year due to lower home
189.56.
entertainment and theatrical distribution results. The decrease in home entertainment results was due to lower unit sales of new release titles, reflecting the performance of Raya and the Last Dragon and Soul in the third quarter compared to Star Wars, The Rise of Skywalker, Frozen 2, Onward, Call of the Wild, and Ford vs. Ferrari in the prior year quarter, along with lower catalog sales. The decrease in theatrical distribution results was primarily due to higher marketing expense for future releases and lower operating income from titles in release. Looking ahead, there are a handful of items I would like.
Okay, so I think we've heard enough there, right? Just typing in chat. Okay, so pretty much what they're saying about all this is we are bullish going in to the future with Disney. We made a hell of a quarter, a hell of a lot of money this quarter, and we are looking bullish going into the future. We have movies coming out, TV shows coming out. We are the parks are looking great, cruises, everything is booming. That is so positive with this. I mean, guys, we are in the just right after market close and up at almost $190. If we remember, if we go back to the calculator, we put this back in. Now that when you get closer to in the money on your calls, the Greeks change and you become more profitable as it goes on. But just as they were at close, if we go to Disney on the calculator, we put our strike. Some of y'all took it at 85. We'll come to that in a second. And most of us got in at 190. FYI, my 185 calls didn't go through, so I only ended up with 4 of the, well, 5 if you include the one we bought on string, of the 190. So if we go to 190 for tomorrow, as the Greeks stand right now, that is a 397%. If you remember, we bought it at 100. So a $400 increase is what? That's right, $400. A $400 profit. There you go. That is freaking awesome. If you bought the 185, you're probably doing a little bit better. So if it stays at wait, what was it at 90? Okay, we're at 90. So it's 197 at 90. If we move this down to 185 at 90, that's 533%. Wow. Alan, you said you bought that. You bought both of them, buddy. You are Scrooge McDucking that shit. I need to put that up. If you bought calls with us today at the 185 and well, damn, mic's getting in the way, I can't see, 190 strike, you are up over 500% on the 185 and 400% on the 190 calls. Guys, this is so awesome. Okay, so let's go. We're still in browser. Wait, let me flash this to you real quick. Look at that. That is 188 right now. If this is anywhere close to this at open in the morning and then continues on up, guys, we just made we just made a damn good payday for this week alone just off of this trade. I mean, wow, that's good. You know what I'm saying? We done good. Okay, let's close with going. Let's see what the news is on it. Disney earnings. The news. That's ahead. 32 minutes. Disney produces best earning and sales since before the pandemic. Wow. Guys, we couldn't have picked a better time to play Disney for earnings. I gotta post that to Discord. I can't believe it's awesome. Just checking to see other people's comments here real quick, and then we'll get back to the news. Wow, I can't. I'm so happy with this. I knew it was gonna be good, but I guess I thought it would have been a slower move up. I thought we would see a bump up into the about 83 in the after hours, and then it take about until the first 30 minutes of the day to get up to 190. So this is really good. I just hope that in the morning people don't jump on profits. So here's my plan going into tomorrow. Okay, guys? My plan for going in tomorrow is I'm going to sell half the calls, ride it open, as long as it's still at or near strike. So if it's at or near strike, I'm going to sell half the calls right off the bat. That is 300 or 400 and some percent profit on one and 500 on another, give or take, whatever it was. So that pays for everything right there. Then the others, I'll wait and see. If it starts dropping quick, I may sell one, then another, but I'm not going to sell all at once because I want to see, because usually of the morning you'll have profit takers and it'll drop some. I like to try to not trade the first 20 minutes of the day, but if it drops too much, I don't want to spend all day waiting to get those profits back neither. So I will take profits when I need to, but I'd like to hold on to at least a couple of them to see if it can continue higher. Okay, so after earnings, what am I going to do? Well, I like Disney as a good play. So after earnings, I'm going to let things cool down, and I'm going to buy in because I think things are going to shoot up, cool down, come down at least to the low 80s again, and then I could see it over the next month going easily up and over 200. So that is my plan with Disney. You know, you don't have to follow my plan, but make sure you have a plan going into tomorrow. Don't go into tomorrow blind, okay? So, guys, if you have any questions, right now is the time to ask. Let me see. Let me see what they got here. Okay, so that's one of the questions. When do we sell our options on Disney? Okay, so competitor, if I only had one call, what I would do personally is if it was like it is now, in between 187 to 192, if it's in between there at open, I would sell and take profits. That's more than double your money. And if it's up there, it's quadruple your money if it's at strike. I've never been mad at myself for taking profits and then it continues to go up. I might say, well, I wish I would have held, but I've never been mad at myself for that. But I have been teetotally pissed at myself, man, if I hold on to that and then it loses. It loses profit. And I just told you there a second ago, I'm going to sell at least half of mine in the morning because I want to lock in them profits. The key to becoming a successful trader is knowing when to lock in profits. You know, is 200, 300, 400% good enough for you? It is for me. I'll take those profits all day long. Yeah, see, that's what I'm saying. Take it now, and I mean, look, if you take it now and it goes up another 100%, are you really gonna be mad at yourself for locking in 400% profit? No, no, you're gonna say, you know what? Yeah, it went on up, but what if it would have went down? I'm happy with 400% profit. You know, hell, Doug just helped me make $300. I'm not gonna be mad, or $400, whatever it is. You're gonna say, all right, man. I like his. I like the cut of his jib. You know, you're gonna say, all right. Let's see what else he's got here. And my point is, I don't want to. I don't want to be a crutch. That's a bad word. I don't want to be the one giving these to you. I want to be the one uh, who shows you how you can do this. You know what they say? Give a man a fish, you feed him for a day, you teach him how to fish, and he can eat for a lifetime. Well, I want you to feed me too. I want you to be able to say, hey man, look at this play I found. That is the whole goal of growing this community. I want us to work together. I want us to be on equal footing. I want to be able to look for one thing while you look for another, and then we come together and say, here's what we got. So, I, I've got some good videos up. I got some more coming. Like I said, I'm working on maybe like a class. This streams of the morning's not been so well. So I thought about what we could do in the morning is do like a part class, part stock watch. Like we can look for some things and stuff like that, but also use it as kind of like a teacher. What it is that one not? Hold on, look right here. I just looked up and seen it. Yeah, it's spiked up to 189 again. Wow, I hope it continues on. Hey, competitor, we made a good play today, man. All right, so let me see here. If you had any other questions. Okay, so now we got a decent understanding of what earnings can do for us. So let's backtrack. Why did we take this play? So why did we take the play? Well, for one, we know Disney. We know Disney, according to the chart here, it's been consolidating. And we know that it's not at a super high right now. It's actually down. Because of COVID and all that, people want to see what is Disney going to do. They're waiting for that right quarter to come in where they start making profit. So it being low like this and it having that support, we knew that if it missed, it's not going to go down far. So we're not going to be out a ton of money. I think we said, what, 63% is the most that we could lose in that situation. So, and it was 300 and some if we win. So that's, what did we say, 1 to 30, 30 to 1, whatever. So we took it because it was little risk with a lot of profit. We picked it because the options wasn't crazy expensive. I mean, they wasn't $1,000 per contract. A lot of blue chip stocks, you can look, they're anywhere from like $250 is on the cheap end of them. So when you see these and it's a good play at a cheap price, jump on it. You know. We also knew that going into it that the parks had been reopened, movies, streaming, all that had been doing well. Uh, we knew that the expected EPS and revenue wasn't crazy high. It was at a decent number. So it made sense to take this trade. You know, one of the things I still do to this day, you know, if you can hear that, that is my trading notebook. I keep a notebook of all my trades. So at the end of the day, I'll write down what I bought, why I bought it, what made me like it. And then when I sell it, I will go back and write, did I make a profit? Uh, how, how did I end up taking profits? Did I sell all at once? Did I sell in patches? You know, did I try to top ticket, or did I just say, hey, here's enough? You know, what did it do after that? Did it continue down, or did it go on up? Would I consider that a good trade? You know, that's how I learned. Is when I was trying to do it without this, I would think something was working, and then find out when I started doing this, I found out it wasn't working. I was just remembering the good trades, but I had a lot of bad trades in it. So this helps you refine your strategy. You know, my strategy, I didn't come up with it all on my own. I took little bits and pieces that I liked that other people was doing, that I was watching YouTube on and stuff like that. I took little bits and pieces until I formed something that worked for me. You know, one thing I can say about the strategy I use is it's good, but it may not be 100% for you. You may have to tweak it just a little bit. And we can figure out those tweaks, but the overall strategy works. You know, you might have to find your own in or out, but it works. Um, any other questions? Let's see. Yeah, I mean, uh, when you're looking at indicators like why I should buy, why I should sell. I don't know if you was in the stream earlier, but I compared it to, you know, can I buy a house? So you're saying, can I buy a house? If you're only using one pattern for your trades, that's like asking yourself, can I buy a house? But you only price the wood as materials. You didn't add in the shingles or the brick or the cabinets or the nails or any of that stuff. You just priced it with wood and said, all right, yeah, I can buy that. But that didn't tell the whole story. You know, this tool, Weeble, it's free to use. Or at least it was. I'm pretty sure it still is. You don't have to have an account for it to use it. And it's got a bunch of indicators. You know, I use support and resistance lines. I use EMA lines. I use RSI, MACD. I look to see if the volume's high. I look to see what the float is. I look to see if there's any news. And 90% of that I can get from right here, right on that platform. So I'm not just pricing in my wood. When I go to build my house, I want to make sure I add in the wood, the glues, the nails, all of that before I make that trade. You know, you're not going to find any one style to where you're going to get 100%. But what I like about my strategy is I pick a low risk, like 5 to 1 or 3 to 1. I definitely don't do anything less than 2 to 1. So I risk $1 to make two. That's the lowest I'll ever do. I never will do 1 to 1. So the key of that is if you do a 5 to 1 stock like what we was talking about with spot, I think that was 5 to 1. Okay, if you make 4 trades and they fail, but you make it on that fifth trade, then you're still in profit. You still made money. It may not be killer money, but you're still green. That's how people ask me, how do you stay green month after month? Like that. I make a bunch of smaller plays, and I end up making sure that I have at least, a 5 to 1, a 3 to 1 ratio. That way I don't have to make sure, that YOLO and shit, that's for the birds. It's okay to do that every once in a while. But if you're YOLO in every trade, you know what? Go and talk to anybody in the chat, in Wall Street Bets new chat. Talk to the ones that are YOLO and everything. See what they say. Well, I've not made no profit yet, but it's coming. You wait and watch. It'll shoot up there. You know what? Even if it does, by that point you've held so long that you could have been making money doing other things. So why not, if you really want to take that play, why not take 10% and put toward that, and then use your other money to do something else? Guess what? When AMC popped, it did so over several days. People still got in and made killer money that wasn't holding for months. What's that Patton said? I'm not going to die for my country. Let the other son of a bitch die for his. Let them hold. Let them do whatever. Take profit, man. The name of this game is to make money. Feed your family. Put, put kicks on yourself or your kids. Whatever, dude. Buy the new PlayStation 5. Let me see what else is on here. Okay, so the thing about Disney is it's a good company. So you're asking if a company isn't doing well. It's a good company. It was just slacking a little bit, right? So the only thing we knew it was mostly COVID and not re-entering and things like that. So let's look at Spot here 1 second. Let me put you on Spot. That's a perfect example of that. That's a good question. Okay, Spot had an earnings call that didn't go well for it. And it's been heading down. Where am I at? I'm too far off. No. Messed it up. I don't know. I'd have to look and see what day it actually. But this is the earnings over the last week or two. Is what drove it down. What it did is it beat earnings. I'm pretty sure it beat earnings, or it come close. I know it had good earnings. I'm just not. I can't remember if it beat estimates or not. But it had good earnings. What people were worried about was in the call. What they were talking about, the growth of the company was kind of in question. Like, how much more can it continue to grow at this rapid fire rate? Well, Spotify is a good company. It's just down right now. It's definitely going back up some. So the only question is how much. I'm willing to bet it can go up to at least 275. So this would be a good strategy for this. So when do you buy in on something like this? I mean, would you take your last dime right now and put it into a company that's trending down? No. So what are we looking for? Well, I want to see a reversal. Now, I'm pretty decent at a chart. So I would start buying shares at right here. Let me put this up. So when I blow this up, this right here be where my mouse is right now. That's what we'll be looking at. So right in here, that's where I had my mouse at a minute ago. I would like, for me, because I'm pretty decent at a chart and I can get out. I want it to be up over that mark, so 217, 218, before I buy in. That'll start to show me a reversal. But before I bought calls in it, I would like to see it above this yellow line, and preferably I'd like to see it above it and retest support around it, whether it be the actual trend line support or if we have a horizontal support. I'd like to see it retest that, and then bounce up. That would confirm that it's actually support there, and it's treating that as support and go on up. Another thing too is the good thing about using charting is a lot of people are using it now. It's always been a pretty good strategy, but now it's like one of the most popular strategies. So I'm not the only one who drew this line. I'm not the only one looking for it to go back up over the 200 EMA line. So what charting does is it's kind of a self-fulfilling prophecy. So somebody's looking for it to be over the 200 EMA line. All right, they see that. They're like, all right, that's great. I'm buying in. So the price goes up a little bit. Well, somebody else is looking for it to be above this line here. So it does that. Now you got more people buying in. All right, so that sends it up over the trend line. That's where the other people are looking at to get in. Everybody has their own little buy-in spots. So when it gets up over that, more people buy in. And then they're like, oh wow, it's in a trend reversal. News comes out about it. Everybody piling in on it. Spotify's back. You better get it while it's cheap. That kind of shit. So, it's something to watch because it's something that everybody else is watching too. That's the same reason, excuse me about that. That's the same reason that I watch 5 different EMA lines. Most people watch 2, 3 max. I watch 5 because those are the most popular ones. Do I really need 5? No. But if you know how to read them, it helps. That's something we can go over too. We're talking about maybe doing a class or something. We can talk about EMA lines, how to draw trend lines, things like that. But so if it gets up over that, let's go back to the 4 hours so we can look at it better. So if it gets up over that and we say, well, we want to buy some calls. Okay, a good way to kind of guess about how long to do your calls with is see how many days it took to get down to that point. And remember, climb ups usually don't take as long with certain stocks. The best way to tell this is to come out. Let me get rid of that. Look on this one, which takes more. So this stock looks like it takes less time to climb up than it does to come down. So we can assume that the climb up will be shorter than this climb down. So let's take this trend line, and if we draw from here back up to 275, where we're expect now, if I'm saying it could go back up to 281 or 285, whatever it was, but we said we was going to take profit if it does it at 275. So let's go with that. So it took 41 days to go from 275 to where it is right now. So if we do a call, depending on the strike that we use, we want to try to use that time frame of around 30 days. So let's go look at options. So in this case, if you wanted to play the August 20, only 8 days away, you'd want to stick real close to the strike price. The 217, the 220, maybe the 222 if you're really bullish on it. The thing about Spotify is once it goes into reversal, the first $10 to $20 after that's going to go quick. After that, it may slow down and step up. So let's go. I usually don't like to play the big days, the ones with a lot of volumes, mainly because where they have so much volume, if something goes south, it's a whole lot easier to get out of. But in doing that, sometimes you pay more money for those calls. So if we stick to the big days, the next one's the 17th. Alright, let's look at the volume here on this. So for the 17th, we have good volume at the 220 strike. You can see the normal volume is under 1,000, so anything over 1,000 is good. So 220, 230, 240, 250, then 300. But we don't want to go to 300. Remember, we're going to take profits at 275. So I would think the 260 would be a good strike for this. And the calls are right under $100. So for Spotify, as long as it gets up over the 217 mark, then those 260 calls would probably be really good. If you wanted to play it safer, the 250 is not bad. It's only $153. So that could be good. Hang on one second, guys. Sorry about that, guys. That was my son's friend showing up here. But yeah, I mean those calls wouldn't be bad at all. Let me check the thing here. Another thing you can do too. Let me show you something right here. I was showing some people with Ford. Um, since we was talking about how can you make money if a stock is trending down, but you don't want to buy puts on it. I can show you right here with Ford. So you can see Ford was trending down. It's broke out a trend now, so it's actually good. But when it was in this trend right here, see how it drew these support and resistance lines going down? Right there, you can see it better like that. So what you can do is when you catch it near the bottom support line, you buy in, and then it bounces up to the resistance line, and that's where you would sell. So yeah, that's how that would work. So you'd buy near support and sell near resistance, wait for it to drop back down to support again, buy in, and there you go. So you can make money on a downtrend. Let me show you one other thing here. Let me put you, on the browser. Don't have one for FinViz, do I? Okay, finviz.com. This is a great place to look for stock. So finviz.com, it's free. I mean, they have a pay-for-it one. That's pretty cool. I can show you that later. But the free one is cool. It just has a lot of ads. I will warn you about that. But you go to Screener. See, it also has a heat map and stuff like that. But once you're in Screener, click All on this one. Now, for this setup, we're not going to worry about this top bar up here. So you want to go to industry, pick stocks. We want to come, now from here we can either pick a price range, or what I like to do is I like to do market cap. And I usually stick to the small and mid. So let's start out with mid. So now we have stocks only, mid market cap, and volume. I don't like to play much that's under a million. So let's go over a million on volume. So you can see right over in this corner right over here that our total of stocks is going down. So what we want to do is get a small group to look at. So let's go to pattern. And you can see there's all kinds of patterns. And I can teach y'all more about these as we go along. But right now what we want to look at is horizontal, support and resistance, strong. So we click on that. That gives us 14 stocks to look at. So let's go by charts. Now their charts is on the 1 day frame. So each candle's a day. So let's take a look at them. AEO. That's got a good support and a good resistance. And if we're not keen on buying options, it's near the support, so that's a good time to buy shares. So let's look at AEO. So let me put you back over on Weeble. AEO. Yeah, you can see where I was showing somebody else this one. So what I did is I drew two quick support and resistance lines. Now, with lines like these, what you want to do is you want to get it near the bottom, one of these, what they call swing lows. So when they come down like this, that's a swing low. When it comes up like this, that's a swing high. So why didn't we go with this top one up here, since that's the top of the swing high? Well, it only crosses between 1 point. That's usually not a good support. If you come down to this next one, well, that goes a couple across of them. A couple of them. It goes across a couple of them. I'll talk right here in a minute. Me know English so well. So you can put one in there, and you can actually call this a range. So support is no longer at a line, it's within this part. So the better support is down here because it hits across 1, 2, 3, what about 8 or 10 in there? 2 more, 2 or 3 more, 3 or 4 more. So that's a good resistance line. Right here is support, the same thing. It's as low as we can go with hitting across as many of them as possible. Now we can put another one right here and do the same thing. Now we have a box, a range that it falls within. Okay? So, what we're looking at, see right now, when I was looking at this other day, it was right here, and I said, this is not a good time to play it because it's in the center. So what you want to look for is you want to look for it to come down or go up and hit support or resistance and bounce back the other way. Once you see that bounce, that's the time you buy in. Now, once we see it bounce, let's see, this support's at 32.63. So a good bounce would be about 33. So we buy in at 33. We set our stop loss between 32.63 and 32.16. On this one, where it's not even a full dollar, I wouldn't care to set mine at 32.16. So my stop loss is set there. You can do that on Robinhood too, set a stop loss. Now, what you can't do on Robinhood that you can do on Weeble is set a stop loss and a take profit order in the same order. So what that'll do is if it hits stop loss, it'll sell it. If it hits your take profit thing, it'll sell it. So you don't have to worry about it. This right here can play out. I'll never have to look at it again if I don't want to. But on Robinhood, set your stop loss, and then you'll have to sell it. You'll have to cancel that order and sell it when you hit your take profit part. And then we would say, what I like to do is, remember, a lot of people are watching this, so they might set theirs at 37.65 too. So to make sure that we can get in on our profits, let's set it at 5 or 10 cents below that. So we'll set it at 37.60 or 37.55. You know what? It's so close to 37.50 that some people might even have the same idea as us. So set it at, sorry about that, hang on, let me get rid of these. Life with dogs, guys. But at key numbers like $7, $7.50, $8. Those are usually good points that some people will take profit at. So the best spot to make sure that you can get in on your profits if you're using a take profit order would be 37.45. Um, but like in Robinhood, when you're watching it yourself, you can watch it. If it looks like it's going to go on up to the 37.65, you can take it. If it looks like it's going to hit 37.50 and come back down, take it there then. You know. Somehow I've got off track here with that. Let me set that back in there. There we go. Let me see if there's any other questions here real quick. Um, yeah, the YOLO thing, that's, I was in on AMC, and, well, I was in on it the second time, from February down, is where I got in on it. And I held a lot. I had about 120 shares. To me at that time, I was having to pay more in, um, more out for bills and stuff, so I had even less money than I have now. So that was a lot for me at that time. Um, and one thing that made me realize was that all that time that I wasted in that, what I should have done is took half of that money and kept in it, and the other half I should have been playing it. I still made plays during that time, but AMC swung up and down a lot. I got lucky. I was able to get in at about $7 or $8, but what I could have done is took half of that in at $7 or $8, and then when it went up to 14, sell, watch it come back down to 9 or 8, buy back in, and done half of it like that, or played something else. What I didn't realize was that was the first real big squeeze I've been a part of. I've been a part of a few smaller ones, but nothing that big. And I didn't realize it would happen over days and that I would have plenty of time to buy in. Dogecoin, get this, I was in at 5 cents. I had about 4 or 5 grand in at 5 cents on Dogecoin. And I said, okay, I want to play this Tesla run. I think it was Tesla. I want to play that. I'm going to take it out, put it in Tesla. Once that's done, I'm going to put it back in Doge. And that's when it went up. That's when it spiked up. It went up to 70 some cents, I think. I kicked myself in the ass. But you know what? I didn't make the profit I would have on Doge, but I did make money. I did do good. So I'm not angry. Alright guys, if that's it for everything, we're going to call this stream over. Guys, y'all have a good day. Hit that like button, subscribe button, and where we at? There we are. Don't sleep on the Twitter page, guys. Check us out on Twitter. There's a lot of good stuff there, okay? You have a good one.